Welcome to Iron Financial, the shop where we forge stronger portfolios by stress-testing market narratives. I'm your lead analyst. Today, we're putting the biotech firm Abivax, ticker ABVX, on the anvil. Now, on the surface, they're sitting on what looks like a fortress of cash, but as we always say here, you have to inspect the foundation. And I'm joined by our market skeptic who, well, he's already found a few cracks.
He has. Look, a fortress of cash is one thing, but a furnace burning through that cash at a staggering rate is something else entirely. Our job today is to determine if Abivax's financial structure is made of solid steel or if it's just a polished facade that's hiding some fatal design flaws. Okay, let's get into the blueprints.
All right, first up, the headline number. This is the one that's grabbing all the attention and making the rounds. As of the end of fiscal year 2025, Abivax reported a cash and short-term investment position of over €500 million. To be exact, 530.4 million. Now, let's be crystal clear. In the brutal, cash-hungry world of clinical-stage biotech, that is a formidable war chest. This isn't just pocket change. We're talking about a massive capital reserve that's been purpose-built to fund operations, to push their lead drug candidate through the finish line, and to begin building out a commercial army. For any company that has no product on the market yet, cash isn't just king, it's the entire kingdom. And just looking at this number, Abivax looks like an empire. This is the kind of balance sheet that's designed to project strength, stability, and a very, very long runway for success. It's their show of force.
But this is Iron Financial, and you know we don't stop at the first shiny number we see. Here is the other side of the ledger. For that very same fiscal year, the company posted a net loss of €336.1 million. Just let that number sink in for a second. That is not just a rounding error or the standard cost of doing business. That is a massive, and I think more importantly, an accelerating cash burn. Think about it. You have €500 million in the bank, but you literally incinerated over $1/3 billion of it in just 12 months. This slide right here presents the central conflict, the entire paradox of the Abivax story. One number screams security, stability, almost invincibility. The other one screams five-alarm fire. This is the kind of income statement that keeps serious investors up at night, wondering just how fast that so-called war chest is truly being drained.
Okay, hold on. Let me just get this straight. You were telling me that they have a €500 million war chest, but at the same time, they're lighting a €336 million bonfire with it every single year. So, which one is it? Are we looking at a fortress that's been built with reinforced concrete, designed to withstand a multi-year siege until their drug finally gets to market? Or is this a beautiful house that's already burning from the inside out, and we're just admiring the polished exterior while the structure rots? It's literally impossible to tell from just these two numbers. We need to see the architectural plans. We've got to understand where the cash came from, and more importantly, where it's all going. Is this a strategic, controlled demolition designed to build something bigger and stronger, or is this just a company with no cost controls whatsoever, spiraling out?
That is precisely the question we're here to answer. You know, to really understand this company's structure, you can't just stand back and admire the facade. You have to get in there and examine the support beams. So first, let's build out the bull case. Let's look at the pillars that management and their supporters claim are holding this entire enterprise up. This is the argument for a strong, well-funded foundation, one that's supposedly been engineered for the long haul. We're going to look at the fuel they have in the tank and the singular focus of their mission. This is their story, their sales pitch. Let's see if it holds weight. So, where did that €500 million war chest even materialize from? It certainly wasn't from operations, that's for sure. It came from a massive capital raise. Back in July of 2025, Abivax executed a public offering that netted them approximately $703 million. This single strategic move is the absolute bedrock of the bull case. It completely reshaped their balance sheet overnight. Now, management claims this infusion provides them with a cash runway that extends all the way into the fourth quarter of 2027. A long runway, sure, but runways can get a whole lot shorter if you're taking off with the afterburners on full blast. That's true. But in the world of biotech, time is the most valuable commodity there is, and this fundraising bought them years of it. It's the high-octane fuel they need to get their lead drug candidate across the regulatory finish line without having to go back to the markets, cap in hand, in a moment of weakness or desperation.
And this, of course, is the official narrative straight from the top. The CEO, Mark DeGardil, says they have a strong financial foundation and are well-positioned. He's framing that huge capital raise as the final piece of the puzzle that sets them up for victory. Okay, but is this just standard CEO speak? I mean, what else is he going to say? Our ship is taking on water, but we're feeling optimistic. Come on. Every captain is going to say the ship is unsinkable right up until the moment they're handing out life vests. A quote is just words on a press release.
Execution is what builds a portfolio. The real question is whether the numbers and the actual strategy back up this confidence. This is the story they're selling to Wall Street, but we need to see if the structure can actually bear the weight they're putting on it.
That's a fair point. So let's look at that execution. The second major pillar of the bull case is their clinical progress. The company's entire valuation is basically tied to one thing, their lead drug candidate, Obefazimod. They are deep into a pivotal Phase 3 trial for ulcerative colitis, and the recent news has been a significant positive. On March 18, 2026, the Independent Data Safety Monitoring Board, the DSMB, they reviewed all the data. And the key finding here is absolutely critical. No new safety signals. Okay, explain that. Why is no news good news in this case? Well, because at this very late stage of the game, with nearly 90% of patients having already completed the 44-week trial, a clean safety review is a massive de-risking event. Now, it doesn't guarantee the drug is effective, nobody knows that yet, but it removes a major potential hurdle that could kill a drug program instantly. This isn't hype, this is a critical milestone that tells you the drug is likely well tolerated, which is a huge factor for regulators and for doctors who might prescribe it. The next major catalyst, the moment of truth, is the top-line efficacy data, expected late in the second quarter of 2026.
And the final pillar in the bull case is the team they're building. See, they aren't just spending money on clinical trials, they're spending it on proven, heavy-hitting talent. They recently brought on a new chief commercial officer, Michael Nasrallah. This guy came from Takeda, where he headed up their hugely successful inflammatory bowel disease franchise. This is not a research hire, this is a sales and marketing hire. They also brought in a new SVP of Global Regulatory Affairs from EMD Serono and AbbVie, and a new SVP of Research from Sangamo. So they're hiring heavy hitters, I get it. But aren't they just building an incredibly expensive C-suite before they even know if they have a product to sell? Seems a little bit like putting the cart before the horse. That's the bear argument. The bull argument is that you don't make these kinds of high-profile, expensive hires unless you are seriously preparing for a product launch. You're building the commercial and regulatory machinery in advance, so you can hit the ground running the second you get approval. This is Abivax signaling to the world that they are planning for and spending for success. They are building the frame of the house before the foundation is fully set, and they're betting everything that the clinical data will come through.
All right, a strong frame is great, a star-studded executive team is nice, but both of those are completely useless if the engine is leaking oil and burning fuel at a totally unsustainable rate. The bull case sounds compelling, I'll give you that. They have the cash, they have promising safety data, and they have the right people to sell the drug if it works. But none of that explains away a €336 million loss. It's time to stop admiring the architecture and start looking for the cracks in the armor. Let's pop the hood on this thing and see exactly how efficient this engine is, or as I suspect, how inefficient it is.
And that is the billion-dollar question, or I guess in this case, the €336 million question. A company can have all the cash in the world, but if its burn rate is out of control, that long runway they keep bragging about can get very short very, very fast. To understand the bear case, you have to follow the money. We need to perform a financial drill down and analyze exactly what is driving these massive and widening losses. So let's get into the statement of income and see where the leaks are coming from.
Okay, let's break these numbers down. This table compares the fiscal years 2024 and 2025, and the trend here is undeniable, and frankly, it's alarming. Just look at every single line item. Research and development costs are up significantly, from $146.5 million to $177.8 million. Okay, I mean, that's somewhat expected for a late-stage company, right? Right. But look at general and administrative costs, G&A. They more than doubled, from $32.9 million to $67.7 million. This pushed the operating loss from $173 million up to €246.1 million. And then you factor in a pretty significant financial loss on top of that, and you see the net loss balloon from $176.2 million in 2024 to that eye-watering $336.1 million in 2025. This isn't a stable burn rate, this is an accelerating burn. Every single metric of loss is getting wider, and it's getting wider fast. This is the core of the bear thesis, right here on one slide.
This chart just makes the acceleration starkly clear. You can see the jump in R&D, and as you said, that's the cost of doing business when you're in Phase 3 trials. But look at that G&A bar. It didn't just grow, it exploded. It more than doubled in a single year. And that is the kind of growth that should set off alarm bells for any investor. R&D spending is a direct investment in the future product. It's supposed to go up. But what exactly is this massive G&A spend buying them? To me, that just looks like pure overhead bloat. You have to explain that line item.
Okay, let's drill down into that R&D increase first, because it's important to differentiate here. The total jump was about 31.2 million euros. Now, the biggest piece of that, 13 million euros, went to something called CMC and supply chain. That stands for chemistry, manufacturing, and controls. This is basically the cost of preparing to produce the drug at a commercial scale. It's absolutely necessary, and it's very expensive. Another 10.2 million went to their Crohn's disease program, which is their second major indication. So on the R&D side, you can make a strong argument that this spending is logical and strategic. These are the costs you incur when you're moving from a research company to a potential commercial entity. These are arguably good costs, but they are heavy costs nonetheless.
But this is the number that really stands out and validates the skepticism, that G&A line item. The source material states that it increased primarily due to a 33.4 million euro jump in personnel costs. And digging into the press release, it specifies that a huge portion of that, 27.3 million euros, is tied to employer taxes and social contributions related to their stock plans. So what does that mean in plain English? In simple terms, as Abivax's stock price went up, the accounting cost of their employee stock compensation went up significantly right along with it. Now, while it's largely a non-cash paper expense, it still represents a massive increase in the company's overhead structure for a business that has zero revenue. A doubling of G&A is almost always a major red flag for inefficiency or a serious lack of cost control. Is the corporate machinery becoming too heavy, too expensive, before the product is even proven to work? That is a key risk.
And this chart right here illustrates another serious crack in the foundation. It's one thing to have a high planned burn rate. It is another thing entirely if you're consistently spending more than you tell the market you will. Just look at this earnings history. For the 3 reported quarters of 2025, Abivax missed analyst forecasts for earnings per share, or EPS, every single time. And these aren't small misses either. In the third quarter, they missed by a staggering 263%.
Wow, so they can't even forecast their own spending accurately. That is not a good look.
It's a very bad look. This pattern suggests a potential weakness in financial forecasting or just basic cost discipline. It tells you that the widening losses aren't just part of some grand strategic plan, they're also consistently worse than anyone expects. This kind of thing erodes management credibility, and it makes it much harder to trust that Q4 2027 runway is a firm number.
So we have the bull and the bear cases laid out in stark relief. On one hand, you have a company that is flush with cash from a massive, well-executed capital raise with positive late-stage safety data and a newly reinforced leadership team that looks ready for a product launch. On the other hand, you have a company with a dangerously accelerating burn rate, soaring overhead costs, and a troubling history of missing its own financial targets. This sets up the ultimate narrative for Abivax over the next year. It is a high-stakes, all-or-nothing race against the clock. Clinical success must be achieved and validated by regulators before that massive cash pile is exhausted by their massive burn rate.
And so here is the timeline that will decide everything. It all hinges on the next 9 months. Late in the second quarter of 2026, we get the big one. Top-line results from the Phase 3 ulcerative colitis trial. This is the make-or-break moment. Positive data could send the stock soaring and validate the entire investment thesis. Negative or even ambiguous data could be absolutely catastrophic.
And these aren't just dates on a calendar. These are binary events. There is no middle ground here. It's win or lose.
Exactly. And following that, in the fourth quarter, we expect results from their Crohn's disease trial. And if the UC data is good, a potential new drug application submission to the regulators. Each one of these catalysts has the power to either reinforce the company's foundation or bring the whole structure crashing down. The pressure is immense.
So what's the verdict here? Is Abivax an opportunity or is it a trap? It's a classic two-sided coin in the biotech space, and you have to see both sides clearly. The opportunity is clear. You've got a massive €500 million cash pile, a stated runway into late 2027, positive late-stage safety signals for a drug in a massive market, and a leadership team that looks like it was built to commercialize. That is a powerful combination. But the trap is just as clear, and it is just as dangerous. The net loss is accelerating dramatically. They consistently miss their own financial targets, which just erodes trust. The overhead costs are exploding, and the company remains entirely dependent on a single drug's clinical success. There is no safety net here. There is no plan B. This is the highest form of high-risk, high-reward investing.
And that brings us to the final, crucial question that everything boils down to. Abivax has bought themselves time with a massive war chest, but their spending is accelerating like a machine with no governor. The clock is ticking, and believe me, it is ticking loudly. Can their promising science deliver definitive, approvable clinical success before their financial engine burns through all its remaining fuel?
that is the entire ballgame. Here at Iron Financial, our job isn't to give you the answer. Our job is to stress test the structure, to lay out the bull in the bear case, and to show you the load-bearing points and the potential fractures so that you can go out and forge a stronger, more informed portfolio.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.